Good afternoon, ladies and gentlemen. Thank you very much for joining us today. We will commence in less than 2 minutes. Please stay with us. Thank you. A very warm welcome to everybody for joining us today at ICC webinar Incoterms 2020 organized jointly by ICC UAE and ICC Hellas. The webinar will be for 1 hour. And first of all, I would like to invite Anna Kamaridi to give the welcome remarks. So over to you, Anna.
Thank you, Habib. Welcome, everyone. On behalf of ICC Hellas, we're pleased to jointly organize this webinar with ICC United Arab Emirates on Incoterms 2020. It is great to see ICC national committees are working closer together when so much of the world is distancing. The Incoterms rules were launched a year ago, and today we have an interesting program explaining the new rules and how they have worked in their first year of operation. With many force majeure claims during 2020, I'm interested to see how the Incoterms rules manage such challenging situations. The facilitator today is Mr. Vincent O'Brien, Director of ICC United Arab Emirates and long-standing member of the Executive Committee of the ICC Banking Commission. Vincent does not need any introduction. I'm sure it will be a content-rich and interactive session, and I wish you all a very informative and enjoyable session. Back to you, Habib.
Thank you very much, Anna, for the speech. And now we are privileged to have Her Excellency Iman Al Zayudi, the former ambassador to Greece, with us. She will be giving her speech on behalf of the embassy. So over to you, Your Excellency.
Hello, dear ladies and gentlemen. Great to see you all. I would like to thank you all for this excellent invitation taking place between UAE and Greece. As you all know, Greece is a very important partner to the UAE. We share strategic relations and we are very good in our economic relations. Yet both countries are working hard to upgrade our economic relations as there are room to improvement in our bilateral trade. I should also thank the organizers for this important work. ICC plays a significant role to provide trade professionals with enough skills and expertise in the application of Incoterms 2020 process to support secure international trade. International trade is the key to economic development prosperity. To implement secure international trade, the parties need clear global rules of practice. Dear all, it was a very fruitful year in our bilateral relations. We have already implemented two comprehensive strategic partnership fora and signed a number of MOUs and agreements. Both parties shared investment interest in the field of tourism, real estate, food technology, constructions, and financial transactions. The result of the strong collaboration of the two countries in the field of economy, agriculture, technology, and education will be presented in Dubai Expo 2020, to be held in October 2021 till March 2022. This event provides an ideal platform for the Greek companies to explore new business horizons by communicating with companies, investors, and innovators during the Expo 2020. Until now, more than 90 companies are participating from the Greek side and would hope to see more companies will join the pavilion. Before I close my welcome speech, I would like to thank the President of the ICC Greece, Mr. Petros Dokas, and the President of the ICC Women Hellas, Mrs. Marina Yavroglou, for the excellent collaboration and support in the work of the UAE Embassy in Athens. Thank you all. I wish you all very successful in your work. Thank you very much.
Thank you very much, Your Excellency.
Thank you.
Now we will go ahead with our agenda for the today, and today our expert is Vincent O'Brien. So over to you, Vincent.
Thank you very much, Habib. Thank you, Anna, Your Excellency. And Your Excellency, you really set the scene because you said how important international trade is to the two countries, but not just the countries right now, to the whole world. And of course, the Expo 2020 in Dubai is a showcase of the whole world of trade. So you really, really set the scene, especially highlighting the importance of ICC rules. So today, everyone, our webinar, which will be less than 1 hour, will cover actually a book of international trade rules. In fact, a book of international trade rules that's used in every single country in the world, and this is the book we will be talking about. So while my seminar will bring you into the key details of the rules so you understanding, there's nothing better than having the rule book, studying the rule book, getting familiar with the rule book and applying the rule book. So now I'm going to share my screen with you and just give me a moment and then we will move ahead with our presentation on the Incoterms 2020 rules. So when we talk about the Incoterms 2020, there really is no such thing as an Incoterm, but there's an Incoterm rule. And that highlights, number one, that the rules are really important. Incoterms are used day to day and they don't seem so exciting, but once there is something goes wrong in an international trade transaction, in the delivery of goods or with the risk, well, Incoterms then become really, really important. So now we're going to get familiar. When we actually look at the book, the cover of the book, we actually see that the book tells us that these are ICC rules for the use of domestic and international trade terms. So these terms can be used for domestic trade between a seller and a buyer, but to be honest and fair, they are used more for international trade between buyers and sellers in different countries, in different jurisdictions, and very soon you're going to see why. A little bit about the background, of the Incoterms rules. On the top right of your screen here, you can actually see the older rule book, okay, setting out the obligations, costs, and risk. And now we're looking at the new book, ICC Rules for Domestic and International Trade Terms. So looking at the background, these rules are around a long time, and that gives them a lot of credibility. In fact, the ICC is around just now about 100 years, formed in 1919. And this book of rules was first published in 1936. So it has been tried and tested over the years between sellers and buyers and has proved to be a magnificent resource. First published in 1936, the rules were revised to keep updated with developments in trade, transport, and technology, revised 7 times. And of course, now we're looking at the current rule book, Incoterms 2020. When we look back again in history, just a few key changes in the rules that to make you familiar with. Under Incoterms 2000, well, we had 4 rules you see on the left: DAF, delivered at frontier, DES, DEQ, delivered at key, and DDU. In the revision to 2010, these rules were removed. Or dare I say that DAF, DES, and DDU evolved into delivered at place. Now, don't worry, I'll be explaining the exact provisions of each rule a little bit later. And then, of course, DEQ actually evolved into DAT in 2010. Now, DAT was a very useful term, and this was delivered at terminal, and a terminal was a designated secure area for delivery of cargo. Now, I personally really like this Incoterm, but this Incoterm actually in the revision from 2010, which we will look at right now, has actually evolved, and now we're going to look at that evolution. So in Incoterms 2010 to 2020, and now I guess we're going to be a little bit more focused because now we're up to date. We need to pay attention. As we saw, DAT, delivered at terminal, now has been replaced, but I would prefer to say has evolved over time into DPU, delivered at place, unloaded. U stands for unloaded. And why did this happen? Well, a key reason was that terminal, while very, very useful with the expansive use of terminals, it was felt to be a too narrow designation, delivered at terminal. So now DPU, delivered at place, of course, it should be a specific place or a specific point at a place, but gives a broader application of the rule. Another key change between 10 and 20, and of course I will go through the individual rules, was in relation to CIP, okay, CIP, carriage insurance paid. Under CIP in Incoterms 2010, the requirement was for basically minimum cover insurance, which generally equates to Institute Insurance Clause C, okay? But in the revision to 2020, now under CIP, it's now insured under a higher level of risk, generally equating to what's called Institute Cargo Clause A. So that is a key change, important changes, significant changes, and we see the renaming of the Incoterms. But now getting a little bit more practical in actually the use of the actual Incoterms. When we open the book of rules, it is actually a book of 11 rules, okay? We have 11 Incoterm rules. And for each of the 11 Incoterms, there is a basic explanation of the rule, each of the 11 rules. And then there is actually on the following pages, the obligations of the seller and the obligations of the buyer. And we can see this on our screen on the right. We have the obligations of the seller and we have the obligations of the buyer. 10. Obligations of the seller, A1 to A10. Obligations of the buyer, B1 to B10. Now here again, there was another change. In the structure of Incoterms 2020, the rules are articulated more in the cycle of how the transaction actually unfolds. Like general obligation, under all of the rules, the seller must provide an invoice to the buyer, and of course the buyer has an obligation to pay the price. Then we have A2, delivery, when the seller has an obligation, where that obligation actually is, seller's obligation to offer delivery, and of course then the buyer's obligation of taking delivery, and then A3 and B3, transfer of risk. Now, a little valuable insight to know for all of the rules is to remember that in Incoterms 2020, once the seller has fulfilled its delivery obligation, well, then the risk transfers from seller to buyer at the same place in each of the 11 Incoterms. And that's something, as you will see a little bit later, that's really, really important. A1 to A10, B1 to B10. When I talk about Incoterms and Incoterms in general, what I actually think about is Incoterms on one hand are so simple. It's just three little letters, EXW, FOB, CIF, DPU, DDP, three little letters, but they are so important for communication regarding the contract between the seller and the buyer. In fact, I say that these three letters are like the ABC of international trade. Three letters, Incoterm rule, and also three letters ABC. And as you know, if you don't know your Incoterms, you cannot commute in international trade, just like if you don't know your ABC, well, it's also pretty much impossible to communicate. Here, for example, we have a seller in Ireland, because originally I'm from Ireland, and he's trying to export all over the world to different countries, different jurisdictions, different regulations, different cultures, and of course, different time zones, different laws and regulation. So you can imagine, how can they ever agree a contract? It must be challenging. Well, the Incoterms are the foundation of the international contract of sale, because with these three little letters, the seller and the buyer can cover not everything, but a substantial foundation part of the obligation between the seller and the buyer. Here is this Irish seller communicating with this gentleman here in the United Arab Emirates. And Mr. O'Brien is asked, after giving him a price, and the price is based on an Incoterm rule. CIF Jebel Ali Port, okay, Incoterms 2020. Well, this buyer here in the UAE, it's only three letters, but he knows what this CIF means. And I won't ask any questions yet, but CIF, the buyer knows it means the seller is responsible for the contract of carriage, because that's what the rule says. The buyer knows that the seller fulfills his delivery obligation when the goods are placed on board the vessel at the port of loading or the port of shipment. The buyer also knows that the seller is responsible for paying the freight charges, the carriage from the place of delivery to the place of destination, I guess port of loading to port of discharge. And even regarding the transfer of risk under CIF, the seller and the buyer know that the risk transfers when the goods are placed on board CIF Jebel Ali from Ireland to Jebel Ali, but placed on board at the port of shipment or the port of loading. Don't try and remember all that, but I'm just showing you how being familiar of the rules is just so valuable and just so important. Here, for example, we have the buyer, as I said, in the United Arab Emirates, and in my case study, the seller here is in my own country in Ireland. Different regulations, different laws, different jurisdictions, thousands of miles apart. The Incoterms provide a foundation on which you can build the other details covered in the contract of sale. Now, Incoterms will not cover everything in the contract, so it's very important to have a detailed contract. And of course, if there's something in an individual Incoterm that you don't particularly want to apply in your contract with the seller, well, then expressly include that condition in the contract of sale and you will actually be covered. Now moving on, looking at the Incoterms and the Incoterms rules. As we said, first published in 1936. And I emphasize rules because it means they're really, really important in the event of a dispute or a misunderstanding between the seller and the buyer. We have a rule book to turn to. And even I've seen this rule book being used in arbitrations. I've seen it being used in court cases. And of course, as a day-to-day handbook, you must have your copy of Incoterms 2020. So make sure you contact Anna from ICC Hellas in Greece. Okay, moving into some detail regarding the rules. Now, under the new Incoterms rules, they kind of have broken them down into Incoterm rules for any mode of transport, which could include multimodal, and the other set is for marine or inland waterway, kind of ships or sea, water. Well, actually, I kind of am a little bit old-fashioned because in the past, they used to be under 4 groupings, Group E, and there was only Ex Works, Group F, Group C and Group D. And still when I'm thinking of Incoterms, I use these groupings because they just help me to understand and identify the correct Incoterm. So here on the screen, we have the 11 Incoterms, including the new DPU. And we've also explained the increase in the insurance specification under CIP. But more detail, let's go down to brass tacks. As we know, much trade most trade is transacted, the goods are delivered, there's no problems, but occasionally there are problems. So here I have a little case study I'm going to show you. Here we have, I'm the seller, I am the seller or the exporter, you know, and let's say, for example, that the Incoterm was CIF, cost, insurance and freight. Is a marine term, strictly speaking, and actually in the rules, it makes it clear that the marine terms, you know, FAS, FOB, CFR, CIF should really not be used for containerized transport. And it emphasizes that in the rules, but actually in reality, they still are used for this. But here's my question. I am the seller and I have an Incoterm and maybe it's CIP, name, place of destination, and that could be a port. I have delivered the goods to the carrier, and that's where my delivery occurs and risk transfer, that's where delivery occurs. The goods then loaded are shipped on board an in vessel, placed on board the vessel at the port of shipment or the port of loading. I have the bills of lading in my hand, but then unfortunately, an accident, something goes wrong, like on our screen, and my goods were actually in that container with the container door open. So now we're going to have a loss of goods, but I'm just going to ask you, whose risk would this be? Seller's risk or buyer's risk in my particular case study, and I hope I've made it clear. It could be CIP or CIF. And I'm just watching here, and everyone knows the answer. The seller delivers when the goods are placed on board the vessel under CIF. If it was CIP, when the seller delivers the goods into the custody of the carrier. But of course, that means the risk has transferred to the buyer. So as we're seeing here, it is the buyer's risk. Well done. Now we can actually move on because I know you really know what you're talking about. As I said, the rules are now grouped into kind of two logical groupings. Rules for any mode of transport, and you can see them on the top side of the left screen. EXW, FCA, DAP, CPT, CIP, DPU, the new one, DPU, and DDP, which I will explain in some detail. And that's one grouping for any mode or modes of transport. And then the other one is rules for sea and inland waterway transport. As I said earlier, FAS, FOB, CIF, and CFR. Now, strictly speaking, and as articulated in the rule, the marine terms should not really be used for containerized transport, but it does happen. So that's just the reality of where we are today. Looking at the individual Incoterms, well, I'm going to be very quick. EXW, as we know, is not used that extensively in international trade like we're talking about today, but it still is really, really important. So under EXW, if I was the seller, well, my obligations are quite small, but the buyer has a lot of obligations. Under EXW, I make the goods available at a named place, and that named place is usually, it doesn't have to be, but usually is the seller's premises. So I don't actually physically deliver the goods, I make the goods available conceptually at my premises or another named place. It's the buyer's obligation after that. So even loading the goods on the buyer's means of conveyance or transport or truck, or if the buyer is using a carrier and the carrier's truck, that is an obligation for the buyer. But of course, we can modify this in our contract of sale between the seller and the buyer. So EXW, minimum obligation there, I say in the Incoterms rules for the seller, minimum obligation. Delivery, well, delivery is kind of conceptual. I don't actually deliver, but they are made available at the seller's premises or another named place, but seller's premises is the common one. And there is no additional cost to the goods. So I really wouldn't recommend this a lot for use in international trade, but there are occasions, major projects, where it still is actually used. But moving forward to more popular terms, and dare I say Group E is done, now we move to Group F, even though it's no longer categorized as Group F, but this is how I actually remember it. So when we actually move to Group F, I'll start off with FCA, free carrier, named place of delivery. Okay. So basically what happens here, FCA, as we saw, is a term that can be used for any mode of transport, but just by way of example, so we understand, I'll just pick air shipment because it'll be easier to understand. So I'm the exporter in Ireland and I'm exporting to the United Arab Emirates. And I'm very lucky because cargo is moved from Dublin Airport, DUB, to Dubai, DXB by Emirates, or if I want to go to DUB to AUH, which is Abu Dhabi, there are direct cargo flights. So I'm really, really lucky in that context, especially in current times. But let's explain the term. The buyer is in United Arab Emirates, and well, for obvious reasons, they really don't like the ex-works term. And they're going to use the nominated carrier, so they're probably going to use Emirates or they're going to use Etihad. Okay, maybe someone else, but this kind of sounds logical. So they asked me for an FCA term, and I said, yeah, sure, no problem. Okay, so under FCA, because it's an F term, and in all the F terms, if it begins with the letter F, the seller is responsible for the export formalities, export clearance. So in Ireland, I get the goods from the premises on my transport, or I contract for a local carrier. I get them to the carrier nominated by the buyer or the agent of the carrier. So it could be Etihad, Emirates. And then I will get the customary or agreed document or delivery document or transport document. So it could be a different document, but in my story, as the goods are going by air, to keep it simple, we will say it's the airway bill because the goods are going by air. And usually then this, of course, would be original number 3 for the consignor. So when I deliver the goods is when the goods are delivered into the custody of the carrier. And there I'd say the first carrier, because there could be subsequent carriers, but in my story today, there's only going to be one carrier. The risk transfers from seller to the buyer when the goods are delivered from the seller to the buyer to the carrier nominated by the buyer. And of course, my invoice price probably will go up a little bit. okay? And some of my colleagues don't like me explaining it this way, but this is the reality, because now I'm taking on some extra local costs in getting the goods to the airport. I also have to take care of export formalities. Maybe an export license was involved. There would be charges involved. Maybe I have to get the documents attested or legalized. So I probably will build these into my invoice, my FCA invoice. Now the buyer's obligations move on from once the goods are delivered. They will have contracted for the carriage of goods, seller over to the buyer. Moving on a little bit further, E, F, and the next F term I'm using here is FAS. And you know, sometimes on seminars, people say this one is not used much, but it depends on your environment. Like I originally come from Ireland, a small Ireland surrounded by water with lots of grass, lots of agriculture. We export a lot of beef. So when I worked in a bank in Ireland, this term was used extensively for commodity shipments. Commodity shipments where, let's say, a buyer from a foreign country would charter a vessel, and the vessel would then come and berth at a port of shipment, and the FAS term would be used. Let me explain. Under FAS, the seller will deliver the goods, usually on the quay at the port of shipment or the port of loading. Now, of course, they could also be delivered on board a barge at the port of shipment for subsequent loading on board the ocean vessel, or the vessel that has been chartered. But just to understand it, it's kind of easier just to think about seller must deliver the goods on the quay at the port of shipment. It's an F term, so it's past the obligation of export clearance. So the seller is responsible for export clearance. But of course, the goods are delivered when they're on the quay, and now the chartered vessel hopefully has arrived, because it should. Then, of course, loading charges are for the account of the buyer. And of course, loading a commodity onto a chartered vessel, the charges can be quite high. So it's very important to be clear and precise as it is under FAS. Obligation, deliver the goods on the quay at the port of shipment. Customary transport document or document agreed in the contract between the seller and the buyer. Seller pays all the costs, but now, of course, loading charges for the buyer, and of course the freight charges, import charges, etc. Loading, I made a mistake. Under FAS, the goods are delivered on the quay, okay, by the seller, and then the loading charges are for account of the buyer, and of course the freight charges, unloading, etc. for account of the buyer. Maybe that's exactly what I said, but anyway, repetition is the mother of education. It's an old Irish phrase. Moving on to a term you're also familiar with, and this is FOB. Free on board, name port of shipment, otherwise known as port of loading. Very, very common term, but of course this is a marine term, strictly marine term. And again, strictly should not be used for containerized shipment, okay, which if time permits, I'll explain a little bit later. Okay, so under FOB, we go a little bit further along the journey from seller to buyer. Now the seller delivers when the goods are placed on board the vessel at the port of shipment or the port of loading. In earlier versions of Incoterms, it used to say the seller delivers when the goods cross the ship's rail at the port of shipment or port of loading. In fact, you know, I used to love that concept because I could imagine the goods swinging back and over the edge of the ship, but actually it's no longer used anymore due to a particular court case. But to be specific, FOB, seller delivers when the goods are placed on board the vessel at the port of shipment, and the risk transfers from seller at that point. Obligation, placed on board the vessel at the port of shipment, risk transfers. And of course, in this particular case, it's FOB, but it's for the buyer to contract or arrange the contract of carriage. So the buyer will be arranging the contract of carriage. So usually, or nearly always in an FOB shipment, the bill of lading will be marked freight collect, because the buyer is organizing the contract of carriage. Moving on with our marine terms, and again, marine term, bills of lading, you're familiar. We're going to move on a little bit further, and now we're going to go to the C terms. E terms, F terms, now C terms. So under the C terms, if it begins with the letter C, the seller is taking on more obligation. So this time, this obligation really is in respect of the seller now will contract for carriage to the named port of destination. Very important, very, very important. Seller will organize the contract of carriage to the named port of destination. But again, transfer of risk is so important, so important. Under CFR, risk again transfers from seller to buyer when the goods are placed on board the vessel at the port of shipment. Now that sounds a little bit strange because seller is contracting for carriage to the port of destination, but delivery of goods, delivery happens when the goods are placed on board, and transfer of risk happens at that same time, if you believe me. And of course, the costs go with the seller in theory to the named port of shipping, because he will be arranging the contract of carriage, etc., the export clearance, etc. But of course, under CFR, import duty, charges, etc., taxes are for the account of the buyer. So after CFR, we have an Incoterm that now includes the letter I. So you all know what that is, what's coming up. So we move on to a very interesting term, which again is a marine term, and this is CIF, and I'm watching my watch, and we're exactly on time. CIF Nameporter Destination. Like CFR, seller organizes the carriage to the named port of destination. And again, the risk transfers from seller to buyer when the goods are placed on board the vessel at the port of shipment. Now, this sounds a little bit strange because now it's CIF, okay? But under CIF, the seller must organize insurance of the goods. Now, remember, CIF is under minimum terms per the Incoterms rules, which is usually called Institute Cargo Clause C equivalent. But actually, the seller and the buyer can agree for extra clauses or higher level of insurance if they actually want. But the important thing is the seller pays for the insurance, the premium. So basically, we could say in simple language, the seller organizes the insurance in a way for the buyer. Okay, so usually what happens, the insurance is in the name of the seller, and then it will be endorsed over to the buyer, or sometimes, as you'll see in a letter of credit, it may be endorsed over to the buyer's bank, and then of course the buyer's bank will be subsequently endorsing it to the buyer. And of course, the party that's going to make a claim must always have an insurable interest in the goods. Okay, we'll more about this a little bit later on. So moving on, my dear friends, I'm going to tell you a little story because Anna mentioned something really, really important. And that was force majeure. And when we were preparing for this seminar, you know, we were talking about cases that happened in the last year. And there have been many cases where goods could not get delivered because there was a lockout at a port. Okay, or maybe there was even a lockout in a courier company or in a freight company, in a shipping company, and even in some cases, documents in the banks were stuck in the banking system, but that's another story. But here I have a case study on force majeure, a real one. I've made it a little bit short because short is good, and I hope it will make sense to you. Here I am sitting in the United Arab Emirates, looking at my computer screen here, okay, and next thing I got an email. So I got an email from a lady called Ashi, and every day I'm getting queries regarding letters of credit, guarantees, and Incoterms. But here was the query I got because you are probably going to answer it for me. So it was a pretty big problem, but the Incoterms rules can solve some problems. So here is what Ashi, I nearly said Annie, Ashi sent to me in her message. Okay. Mr. O'Brien, we shipped on a CIF basis. We've explained it, cost insurance and freight, okay? Cost insurance of freight, port B. I don't want to say the actual port, okay, the country, okay? Port B, so that would be port of destination. Incoterms 20, in line with my advice. I hope my advice was okay. The goods were loaded or placed on board the vessel at port A. I get that's the port of shipment or the port of loading. The name of the vessel is VIN, V-I-N, V-I-N. I guess that's a good name for ship as well. At the port of shipment, we'll call that port A for destination, carriage to or shipment to port B. So what's the problem, Ashi? Well, the problem is that due to lockout, is it lockout or lockdown? Now I'm joking a little bit. Lockout, lockdown, we all know about lockdown. We all know, we don't want to talk about. But lockout could happen at a port, okay, where there isn't access to the quay or the wharf or goods cannot be cleared. So due to lockout at port of destination, Okay, CIF, port to destination. So the guy shipping from port of loading to port of destination, a marine term, the goods could not be unloaded. Wow, that sounds bad for the buyer. And the buyer is suffering acute delay in delivery of goods plus demurrage. Well, this was a common problem and not a very nice problem, but it happened and it's unfortunate, okay? So Ashley has a problem. What's her problem? The buyer holding back payment due to force majeure. Wow, that's a legal term, okay? Force majeure at the port of discharge. Now, a force majeure, there are many definitions, but ICC has a very good one. But basically, in simple terms, it's an unexpected event beyond the control of the contracting parties, okay? Okay, so due to force majeure at the port of discharge, I guess it was lockdown, which caused a lockout, okay? Which the buyer says is unexpected and beyond his control as it is a state-driven lockdown for health purposes. I think we all can share the feeling from this story. So Ashley is asking me, what can I do? Okay, and she's the exporter, the seller. What can I do as if the goods not delivered, we will lose payment rights? And I don't know the amount of this contract, but my guess is it was a lot of money. Well, see, the good news, there is some good news from Ashley. It doesn't solve all her problems, but it goes a long way to solve her problems because the buyer is saying that he's not paying because the goods have not been delivered. What can I do if goods not delivered as we, as seller, will lose payment rights? Well, actually, Ashley, under the rules, if we read the rule under CIF, we've already covered it. Under CIF delivery, the goods are delivered not at the port of destination, but the seller delivers the goods when they are placed on board the vessel at the port of shipment. Otherwise, we call it the port of loading. And of course, I'm sure Ashley has her bills of lading showing shipped on board a named vessel at the port of shipment. You have already delivered, even though there is a problem at the port of discharge, okay? So the rules sometimes are invaluable. Moving on a little bit to some other terms. CPT, as we saw, is a term used for any mode of transport, but of course it can also be used for marine shipments, right? It can be used for any mode of transport, okay? And the equivalent as a strictly marine term would kind of be CFR. So under CPT, basically, the seller must organize, his obligation is to organize carriage of the goods to the named place of destination. The risk transfers under CPT, if, for example, it was used on a marine shipment. Remember, CFR will be when the goods are placed on board the vessel, but you could still use CPT for marine shipment, maybe containerized, but the risk would transfer from seller to buyer a little bit earlier when the goods are handed into the custody of the carrier. In the old version, people used to refer to the first carrier, as there could be a number of carriers. And I see a few questions are coming in now, but I will get to them. I'll get to them in a moment. And of course, under CPT, the seller pays the cost to the named place of destination. Buyer is responsible for the import duties, etc. Okay, very, very good. Used for any mode of transport, but also including marine. CPT is a kind of an extension of the CIP is an extension of the CPT because now we have the I, and of course the I stands for insurance. But remember, if, for example, if the goods were going by air, I'm just picking air just to differentiate. CIP can be used for any mode of transport. Okay, it's similar to CIF in many ways, but there are differences. But let's pick air shipment. If it was an air shipment, O'Brien now would be contracting for the air carriage to the named airport of destination, named airport of destination, named airport, named place. It's an airport of destination. But the risk in this case, if the goods going by air, for example, the risk would transfer from seller to buyer, okay, not when the goods are placed on the aircraft, or across the aircraft rail, because I haven't seen a rail on an aircraft, but the risk transfers when the goods are handed into the custody of the carrier, okay, of the carrier. And under CIP, the seller is responsible for the contract of carriage, okay? So when the goods are handed into the custody of the carrier, and we could say actually first carrier. So basically the seller is now paying the cost, but the costs now also include the insurance. But we saw the distinction between CIP, which can be used for any mode of transport, CIF, should be strictly for marine terms. But under CIP, the insurance requirement in Incoterms has now gone up to the equivalent of, dare I say, Institute Cargo Clause A. And whereas under CIF, it still remains at minimum terms, equating to the C clause, unless you want to add additional clauses or risk coverage. CIP, buyer is still responsible for import duty, clearance, etc. Unloading is for account of the buyer, but you know, in most air shipment, in the contract of carriage, unloading is included actually in the air freight. Okay. Now moving on to something nearly new. So we have DAP. Now, what's really interesting is, in my own experience, and maybe someone has different experience, but I have seen a progression over time where sellers of goods, especially with the expansion of courier companies, sellers are taking more control of the supply chain. So that means they're taking care of the delivery of the goods, maybe not quite to the end user, although that's actually what's happening, but to deliver to a named place of destination. So DAP, growing in usage, and of course DPU we will see is a wonderful Incoterm coming up. Under DAP, now the seller's obligations go to the named place of destination. So if we were talking about the air shipment from Ireland to the UAE, now I organize the carriage to airport, if it's an airport of destination, CIP, DXB, CIP, AUH for Abu Dhabi. But here now we see the risk profile changes. And due to complications in the supply chain, many buyers now want the seller to take this responsibility of the delivery, and not that delivery and risk transfers at the port of loading or place of receipt of the cargo in, let's say, the country of export. So under DAP, the risk stays with the seller till the goods are delivered to the named place of destination. The seller pays the cost until the named place of destination. But DAP, named place of destination, organized by the seller, does not include unloading. So in my example, if it's an air shipment, well, it's not that important, but you could also use DAP for a marine shipment if there was a chartering of a vessel by the seller in this particular case, okay? So you can imagine loading, unloading becomes really, really important, because the unloading could be really, really expensive under a chartered shipment or a shipment of a commodity. Bringing us right up to date to our new Incoterm, new for you. So under DPU, delivered, place, unloaded. Remember that this has evolved from DAT, delivered at terminal, which many people actually liked, okay? So under DPU, delivered, place, unloaded, the seller must deliver the goods to the designated named place, okay? Which could be an airport of destination or a port of destination or discharge. And the risk stays with the seller, this to the same place of destination, and the seller pays the cost to the same place of destination. You know, this sounds exactly so far like DAP, but DPU cannot be the same as DAP. And you're absolutely right. Someone has put in here unloading, because under DPU, whereas DAP, the seller was not responsible for unloading, under DP, responsible for loading at the unloading at the named place of destination. But of course, this is not past the import clearance, etc. Now, Incoterms don't deal with the import clearance or customs duties, tariffs or quotas, etc. They just kind of tell who is responsible, or where does the responsible fall between the seller and the buyer. The local regulations will tell you exactly what are the tariffs, what is the import duty, what are any other import clearance actually requirements. Moving forward, of course, DPU includes unloading, delivered, place, unloaded. So, my dear friends, that's bringing us near the end of our seminar, but not quite there yet. Because under the Incoterms rule, we have DDP. So within the 11 rules, okay, DDP of the rules, 11 rules, DDP is the maximum obligation of the seller within the rules. So DDP is when the seller must deliver the goods, deliver duty paid, and usually to the buyer's premises or the buyer's warehouse, okay? But there's something interesting to bear in mind. In one hand, it's the maximum obligation in the rules, but you could say on the other hand, it's not really maximum obligation, because under the rules, DDP, it does not include unloading in the rule in DDP, which is a little bit strange because it feels like it's after DPU, which included unloading, but DDP does not include unloading. So you may need to just include something specific in your international contract of sale. Carriage, deliver the goods duty paid to the named place of destination. It's after import clearance, so the seller is responsible for the import clearance. Risk until the goods are delivered, duty paid, and the seller pays all costs, including import duties and taxes. So again, you know, between countries, Ex Works is kind of troublesome. I'm not saying it doesn't work sometimes. A little bit troublesome from Ex Works is a bit troublesome for the buyer, but also I could say DDP a little bit troublesome for the seller, because I can organize everything on the export side in all the Incoterms until I come to this one. And this one I'm responsible for import clearance in maybe a country a long way away that I'm not familiar with the import clearance, etc. So it works, it's reliable, but a little bit more challenging for the seller and the buyer. So I have a few questions here I might just turn to if I can. Yeah, okay. Oh, okay. Well, one is regarding the contract of carriage, and someone asked me a question. I said correctly, you're right. Under FOB, I said delivery occurs when the goods are placed on board the vessel at the port of shipment, port of loading. I did. Under CIF, I also said the seller delivers when the goods are placed on board at the port of loading. Okay. So the question was about who organizes the contract of carriage. Well, of course, it's covered in the rules. Under FOB, per the rule, FOB, the buyer is responsible for nominating the carrier and to arrange the contract of carriage. Under CIF, the seller is arranging the contract of carriage, but you are absolutely correct. The place of delivery is when the goods are placed on board the vessel at the port of shipment. Excellent, excellent. And I have another one or two questions here. Maybe I will come to them a little bit later. Okay, so what I'm going to do now is I'm going to do what I would call the Incoterms 2020 quiz. And I'm going to have a number of questions, and I'd like you just to type in true, false, yes, no, whatever you think is the answer to these questions as we actually go through them. Oh, very good. And yeah, okay. Oh, yeah, someone asked me, can you have the nice slides or the materials afterwards? And the answer is, of course, you can, okay? And now I just go back to a question, and I'm having difficulty opening the question, but I'll continue with my questions. Okay, so here we have the quiz, and it appears the chat is working perfectly, so type in your answer into the chat. That would really be wonderful. So first question, and I hope we covered it during my presentation. Okay, so here we go. Here we go. Let me call out the question to you. And we move this over here. Okay. Question 1. In all of the Incoterms rules, all the 11, remember 11 rules, okay? The seller has an obligation to provide the buyer with a commercial invoice. I mean, an obligation to do it, not just it would be nice. Obligation, true or false? True or false? And again, you guys are all amazing. True, 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 true. Okay, well, maybe this question was a little bit too easy. Okay, my second question is not quite as easy. Okay, under Ex Works, the seller delivers when it places the goods at the disposal of the buyer at the seller's premises, loaded on board the buyer's collecting vehicle. So again, true or false? So under EXW, is there an obligation for the seller to load the goods on the buyer's means of transport or the buyer's truck or conveyance? True or false? And again, we are getting false, 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 false. We have one true, but everyone else is false, and the answer is false. Wonderful. You guys are actually great. Now, I need to make a clarification about FCA that someone asked me about here that I didn't skip it. I just omitted it by mistake. So I'll come back to your question on FCA just a little bit when I finish the quiz. Okay, when the seller or when the contract term, Incoterm, is CPT, CIP, CFR are used, the seller fulfills its obligation to deliver when it hands the goods over to the carrier in the manner specified in the chosen rule, and not when the goods reach the named port or place of destination. True or false? And true or false? And again, true, 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 true. You guys are amazing. This is absolutely fantastic. Okay, because that's a tricky question. FCA question, I'll get back to it in a moment. Next question in my little quiz. Under which of the Incoterms? Oh, Habib is back. So that usually means I'm going to run out of time soon. So thank you, Habib. You always make me feel so relaxed. I really appreciate that. Okay. Under which of the Incoterms 20 rules must the seller deliver the goods on the quay or a barge at the port of shipment, port of loading, nominated by the buyer? The risk of loss or damage to the goods passes when the goods are delivered on the quay or barge, and the buyer bears all costs from that moment onwards, including loading of the goods, dare I say. So you have to pick one of the 11 Incoterms, and I think you know, yeah, someone said a marine term. I agree it's a marine term, but which one? Which one? FAS, 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 and we have one FOB. So FAS is on the quay. FOB, we just had everyone else is correct, just one answer. FOB is when they're a little bit further placed on board the vessel at the port of shipment. Okay, and our timing is still not too bad. Under CIF Incoterms, only if one or two more, the buyer must clear the goods for import. Based on the rule, under CIF Incoterms, the buyer must clear the goods for import. True or false? And again, we have, yeah, true, true, false, false, true, 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 true. Fantastic, everyone, nearly everyone got it right. Now, here's a very practical question. A bill of lading, so bill of lading for marine shipment, named vessel, port of loading, port of discharge, consignor, consignee, goods description signed by the carrier, master, or an agent. Anyway, a bill of lading has been issued by the carrier in respect of the contract of sale between the seller and the buyer, okay? And the contract was CIF basis. On reviewing the bill of lading, but I guess you haven't looked at it yet, but you know the contract was CIF. What would you expect the bill of lading to be marked? It's CIF, freight collect, freight paid, or freight not applicable. I think you can just pick one word, collect, paid, or not applicable, okay? And it's CIF, and everyone, oh, paid. You guys are wonderful, okay? I think I'm nearly there, okay. Under the term starting with C and D, it is for the buyer to make the contract of carriage. C and D, it's for the buyer. I get confused at this stage. And you're all answering the question. You're all answering true or false, and false. Perfect, false. You guys are absolutely wonderful. Wonderful, okay. Wow, I thought I was done. Oh, but you're not. Under the term FOB, Habib's really looking at me seriously now, so I'm getting really stressed here, okay. Under the term FOB of the Incoterms rules, ownership or property rights in the goods transfer from seller to buyer when the goods are placed on board the vessel at the port of shipment. Now, this question is a bit unfair because I didn't cover it. Again, I forgot to do two things, and this was one of them I forgot, but I think you'll know the answer. What do you think? Okay, so under FOB rules, ownership, property rights in the good transfer from seller to buyer when the goods are placed on board the vessel at port or shipment. Type whatever you like in the chat, you know, don't be restricted by me, don't be restricted. And the answer, yes, is false. No, sorry, and I'm looking at the chat, and I just see what people said here. False, false, false. And that is very good. And you guys are really brilliant. And I'm just going to go back a little bit to that question if I can. Okay. And it's this one. And it's just to make a point I forgot to make. Many people perceive that in the Incoterms rules, because they're thinking about the workflow, they're thinking that if it's FOB, ownership passes when the goods are placed on board the vessel. Okay. Or CIF when the goods are placed on board the vessel. But actually the Incoterms rule do not deal at all with the property rights or title to the goods. Even though bill of lading, we know what is a document of title, but remember this, it's very important. So this is something you need to articulate in your contract. And of course, in most cases, title transfers in a contract when the goods are actually paid for, but this is to be agreed between the seller and the buyer. And my final question here, and we're wrapping it up, is look at picture. And in the picture, we're talking about the Incoterms CIF. And under the Incoterms CIF, we have 3 points, 1, 2, 3. One is at port of loading, I guess the key side. The second one is on board the vessel, number 2, at the port of shipment, the port of loading. And number 3 is at the port of destination, a port of discharge, port of destination. So at which point, 1, 2, or 3, risk transfers from seller to buyer under CIF. And my dear friends, I know you all know the answer to this one. Yep. 2, 2, 2, 2, 2, 2, 2. Great. So risk transfers when the goods are placed on board the vessel at the port of shipment. So I see Petros has joined us, which is fantastic. So nice to see you. And Habib can relax a little bit because I'm actually finished. And Habib, I think in the text I missed 1 or 2 questions. So if there's one there, you can ask me. But before you come in, Habib, someone asked about FCA. I just to explain. In my example, FCA, it was the airport, remember? And I said the seller delivers the goods when the goods are delivered to the carrier at the airport of departure. But the question I was asked about FCA and using it for when it's the seller's premises. And it's a very good question because FCA can make a lot of practical sense for use at the seller's premises. Because if it's FCA under the Incoterms rules, but it's at the seller's premises, the seller is responsible now for the loading on board the buyer's means of conveyance, or conveyance he is organized with a carrier. And also because it's an F term, even though it's the seller's premises, the seller is responsible for the export clearance, because under all F terms, the seller is responsible for export clearance. So Habib, that's it, unless there's one burning question that remains.
Thank you very much. I think most of the questions have been answered. Only one question just came now, and somebody is asking that when does the title to the good transfer under the Incoterm 2020 term CIF, when the goods are shipped on board or when the goods arrive at the port of destination? So I think the title to good is a bit confusion over here.
Oh, okay. It kind of was answered in our picture question, but it's such an important question. Let's just be clear. Okay. So it was CIF. CIF?
Yes, CIF. Okay. Yeah.
So exactly. Again, and so the question is, when does the title?
When does the title to the good transfer, when the goods are shipped on board or when they are arrived at the port of destination?
Okay. Well, the answer is this. Delivery under CIF occurs when the goods are placed on board the vessel at the port of shipment. Risk transfers when I know it's not your question, risk transfers when the goods are placed on board the vessel at the port of shipment. But regarding the transfer of title, it's not covered in the Incoterms rules. And that important question needs to be addressed in the international contract of sale. And I hope that answers the question. Thank you.
Thank you. Thank you very much. I think, Vincent, everything has been covered. Thank you very much for the informative presentation. Now we have the president of the ICC Hellas with us, and he will give the closing remarks. So, word to Mr. Petros Dukas.
Really, it was a great experience and very, very insightful. So, dear friends, dear ambassador, dear Vincent, congratulations. It was very, very informative and very dense. You kept really to the time limits. This is the start of a great partnership between ICC Greece and ICC UAE, our brothers in the UAE and sisters in the UAE. And we expect much more of that to happen in the coming months. The whole idea of ICC was that freer trade leads to better understanding between people. And better understanding between people means more peace. And more peace means more prosperity. And what you just described, Vincent, Incoterms, facilitates that trade, which facilitates that better understanding, which facilitates prosperity. So many, many thanks. It was a great experience. And to Anna Kamaridis and Philip Ioannou, who've done a great job in trying to set this thing up for all our friends in Greece for this better understanding. So all the best to all. We look forward to much more cooperation between our ICC chapters around the world. Have a happy year and please keep safe. Things will be much better soon, I hope.
Yes, they will. Thank you very much, Petros, Ambassador, and of course, Anna, for all your hard work, and of course, Habib for coordinating everything and keeping me on.
Thank you, Habib, and Anna.
Thank you.
Thanks to everybody.
ICC UAE makes it possible.